Bitcoin, August 18th, and yesterday we saw the appearance of the volume spike I mentioned to you with a long candle spread. Very well. Yes, if you follow the video, we saw that the forecast we were making for 7 to 10 days, the clues that are appearing maintain that forecast for us. But we said it was going to go short. That is, the price was going to drop little by little, and already looking for the break of certain supports, such as those formed by the channel, which I'll explain to you later. The pseudo channel that was forming and almost reaching the channel support. We said that if a volume spike appeared with a long candle spread breaking 64,000, we were going to make the forecast be delayed. And that is exactly what we have seen. During yesterday, we saw that volume spike. You already know that a volume spike is the clearest manifestation of the assistance or the presence of strong hands on the chart. We saw that presence right there, more than 1.5, a large candle spread on the 4-hour chart, and a breakout of the 64,000 zone. Now, what the 64,000 zone is doing is acting a bit like support. In other words, up until now, it had been resistance. Once broken by the price, it becomes support. And to break through 64,000 again, we need to see the presence of institutions once more. Since the trend or forecast is always short term, it takes less force to break below 64 than it does to break above 64. For example, yesterday we said we needed that strength, that 1.5 spike. On the other hand, now we might be able to see that breakout. That doesn't mean it'll happen immediately. It's now 10 o'clock a.m. on the 18th, but we can see it with less volume intensity, although some strength does need to appear. I'm Mikel Vasquez. This is Daily Bitcoin Analysis, and as we do every day, what we're going to look for are clues that institutions or strong hands are leaving us on the Bitcoin chart. Institutions or strong hands are those entities that have a huge amount of money invested in Bitcoin, but it works on any chart, and what they do is move the price at their whim. Doing, as we saw yesterday, delaying an obvious move so that retail gets nervous, and in the end what they want to do is, without rushing, little by little take all that liquidity, all that money, move it from one place to another. That is, buy high, little by little, keep buying, move the price quickly, and sell high. In other words, buy low and sell high. It's a cycle. They always do. All right, without further ado, let's do what we always do. Look for those clues from the institutions, see those Wyckoff phases that we are in the long term, to see that forecast, both on the 7-10 day as well as on the 15-30 minute. In the long term, that we must always have. If you're interested in making money with trading, whether professionally or as a side job, I've designed a course where you'll stop looking at indicators and start understanding what the market is really doing, what the strong hands are really doing, and you'll be able to make money the way they do. Let's continue with the analysis. Present, because any entry we make, whether in swing trading, which is 2 or 3 days, or in intraday, or in scalping, or in 7 days or a week, we have to see what is happening in the long term, because this gives us the evidence or the trend that the price, if it's going to go down in the long term, it's evident that our short entries are going to be more productive. We can also take advantage, obviously, of pullbacks, because in a phase like now, where we are in a long-term accumulation phase, there can be 100 pullbacks and we can take advantage of them. In any case, as long as you enter with the right conditions, whether short or long, you can win. But you should know the phase we are in Wyckoff, because the more data you have on the phase you are in, the better the trading will be. Very well, we are, as I was telling you, in a very evident accumulation phase. We saw the selling climax. I warned you that it could be a selling climax, because you know that when the movement is appearing, it is being born, so to speak. It is more difficult to determine what is happening. That is why it is more difficult to determine what is going to happen with the price. Once it has already happened, it's always very obvious, well, this was an accumulation, this was a distribution, a markup, a markdown. The hard part is seeing it when you have it right in front of you. Very well, so we saw it. We said it was an accumulation. You see these candles that represent a week, and now it was struggling at the top of that accumulation, And now, little by little, it is pushing the price towards the bottom with that pseudo channel that I'll tell you about in 4 hours. It is going slower than what we expected, but it is heading towards the promised zone. All right, now we're on the 4-hour chart. You know, this is our headquarters, where any position we place, whether for 7, 10 days, for intraday, scalping, we always have to keep this chart in mind because it really gives us that clue to see the current it's in, if you're short, if it's going down, if it's going up. Very well. Okay, we're on the 4-hour chart. I'll tell you the channel, which was 68,000 and all of July, and what we've had of August, a pseudo channel has appeared where the support is at 62,300 and the resistance is near 65,600. Okay, the last movement has been even smaller. It reached near those 62,300 without touching it, and we've already seen the weekend, a classic weekend, practically without movement. It tried, when Sunday night arrived, to make a move to fake out to the upside and downside, and in the end, the volume spike I mentioned appeared to delay that move. We continue to wait with the clues from the strong hands for the move to appear in these 7 to 10 days in this zone. In other words, trying to break or at least touch 62,300 again and try to break through it. That is the forecast. Simply put, there's been a delay because the move hasn't been, even though there was a breakout of 62, 64. In principle, we don't see any continuity in looking for more highs, and we understand that it's going to try to break 64 again. It's not going to be easy. During today, August 18th, we'll see that attempt at a breakout. We're also going to set up a plan B because, you always have to account for all conditions, even the more remote ones, that could appear on the chart so that nothing catches us by surprise and we're prepared. We are waiting. Forecast A, the forecast I believe in most fervently, is hitting 62. As I tell you, probably breaking through it and doing retests over these 7 to 10 days. The condition for that forecast to disappear, or at least be delayed, is for that strong volume to appear again. We're looking for strong hands, like we saw yesterday, of 1.5, and for there to be no struggle. In other words, that there are no wicks on the top and bottom of the candle where that volume appears, but rather a spread, meaning the candles close and open are very flat, practically like the candle we saw. I'll make it a bit bigger for you so you can see it clearly. A very, very flat candle. In the event that we see volume coming in and a green candle like that, we would then be looking for the previous high zone, which is in the area we've called the pseudo channel at 65,600. It's a more remote possibility, but you have to keep it in mind because of those delays, those games that the strong hands are playing. Very well, we have that forecast set. Let's also see how the intraday scalping is looking for today. We've seen the zones or the clues that I always tell you about to enter and do some good scalping here in this case. So you can see that also with, I always tell you 3, but even when 2 appear, the probability of success is very high if one of those 2 is high volume. For example, when you see volume, the 3 conditions we always set are arrival at an activity zone, that 15-30 minutes have their own particularities, and in my course, I explain how to look for them. But they are those zones where the price appears repeatedly and has reversals. With those basic elements, we look for activity zones. One element, arrival at an activity zone, 64, is clearly one. Appearance of rejection. That is, right now, for example, we are seeing those rejection wicks, dojis or rejection wicks. And the third one, which is the fundamental one, is the appearance of significant volume, a volume spike. Every chart has its own particularity regarding what constitutes a volume spike, but it's evident to the naked eye. Even if you don't know the exact amount, you can see which one it is. That is, a very large volume candle appears, followed by smaller ones. Those are the volume spikes we refer to across all time frames. When all 3 appear, it's a good time to enter. It appeared here, a good time to enter up to that rejection zone of 64,000. Very well. I also wanted to tell you, as I tell you every day, the VIP Telegram group, which has about 100 people, I closed it to the public. That is to say, currently, only people who sign up for the MEX.com exchange and make their first deposit can access the VIP Telegram, which is where I post the 2 entries I usually make daily. That MEX will give you $50. It's the exchange I always use for all my trades. And without further ado, see you tomorrow. I'm Mikel Vasquez. This is Daily Bitcoin Analysis. I really appreciate you watching this video. As I always tell you, this is not financial advice, but rather I am sharing my experience with you after more than 15 years in professional trading. I would like to warn you, as I have been doing these last few days, that if you look for me on Telegram, Instagram, or TikTok and my name appears, it doesn't mean it's me. I'm only here in these videos that you see on YouTube and the links that I put in this video. Do not search for Mikel Vasquez Daily Analysis on Telegram, on TikTok, or on Instagram, because they are going to try to deceive you using my name. It is not me. I only appear in these YouTube videos and in the description. See ya. Thank you very much.